Thanksgiving dinner, my grandmother asked me, what the heck is this Bitcoin stuff anyway, right? And I said to her, do you remember when Visa cards first came out? You were used to paying with cash or with a check, and then a Visa came out. It was this weird payment system that you didn't understand. And she said, yeah, I remember that. I said, well, Bitcoin is just the next evolution of another payment system.
Brace yourself, Nakamoto was the foundation.
What up guys, Nakamoto Crypto here. Did you know that you could easily lose up to 90% of your fiat savings to inflation alone in the next 100 years? But that would never happen with Bitcoin, as Bitcoin is the best treasury reserve asset that humanity could ever ask for. At the moment, around 3.6% of the total BTC supply is locked in long-term holdings by institutional investors. According to the data, 13 entities have amassed close to 600,000 BTC, which is about 2.85% of the total supply and approximately worth right now $6.9 billion. The list includes at the top MicroStrategy with close to 38,250 BTC, estimated to be worth about $450 million. The second on the list is Galaxy Digital Holdings with about 16,651 BTC, estimated to be worth about $198 million. The third is the payment company Square Inc. They are currently holding 4,709 BTC. And Square Inc. is founded by Twitter's own Jack Dorsey. Separately, some companies help their clients to invest in BTC. One such company is Grayscale Investments through its GBTC Trust, which holds currently around 450,000 BTC. With that being said, the amount of Bitcoin that publicly traded companies hold as a reserve is a tiny fraction of the corporate treasuries around the world. Indeed, the actual amount of cash held in reserves is in the trillions of US dollars. But consider this: 9 companies in the S&P 500 are sitting on close to $600 billion in cash and short-term investments, and if just 5% of that, which is $30 billion, is converted into Bitcoin, then the price of BTC could easily increase 5-fold. Of course, there is the question of where to place the Bitcoin in company investment portfolios. The most likely category is under the alternative investment section. The need to strike a balance between the traditional and alternative investments might reduce the appetite that the market might have for the cryptocurrency. Nevertheless, the potential demand is still huge. As mentioned in recent report by Fidelity, the alternative investment market grew to $13.4 trillion by the end of 2018, and very little of that was in Bitcoin. It might take converting as little as 5% of that to see the Bitcoin price to the moon. Some investment firms have chosen to create entirely separate holding companies for Bitcoin and crypto assets. For example, Stone Ridge launched a New York digital investment group, which today has over $1 billion worth of crypto. So what drives this movement? To understand this phenomenon better, Michael Saylor, the founder of MicroStrategy in particular, picked Bitcoin as his reserve asset for the next 100 years as the base on which to measure the success or failure of a reserve asset. Of course, most companies are founded with the expectations that they are going to be around for quite some time, centuries probably. Even for individuals, it still makes sense to look at how investments might change over a 100-year period, as a person might amass wealth intended for themselves or their loved ones, or even causes that are close to the heart, such as climate change. As Michael Saylor said, an excellent way to evaluate an investment is to take $100 million and move it forward 100 years and ask the question, what happens if I had $100 million worth of a currency in any of the largest cities in the world in the year 1900? and I went forward 100 years later to the year 2000 and I put the money into the best bank in the city. I have two types of risks: counterparty risk and inflation risk. Regarding the counterparty risk, every major bank in every major city around the world failed in 100 years, and that is a 90% probability that you will lose everything. Of course, the most obvious weakness to spot when considering the performance of any reserve asset in 100 years is inflation. Out of all asset types, fiat currency experiences the most inflation over time. For example, what $5 could buy you in the 1920s is far more than what it can buy you right now 100 years later in 2020. According to a website that collects and processes government data for the benefit of the public, the US dollar loses close to 2% of its purchasing power every single year. So what about other assets? While real estate might seem like a great asset to hold as a reserve for the long term, it is susceptible to lose value through things like taxes. More importantly though, real estate faces risks that come with changes in regulations or public governance. In the span of 100 years, it is highly likely that a government that respects private property ownership is replaced by one that does not. This has already happened several times around the world in the last century. Meanwhile, stocks also faces risks of poor management and regulations. Michael Saylor gave the example of power and water utilities, industries in which highly lucrative companies have become nationalized. We cannot say with conviction that in the next 100 years, internet service providers, for example, aren't going to be turned into public utilities. Even gold and other precious metals run into issues when you look at them in terms of 100 years. While they appreciate over time, the logistics of holding them can be stressful. You could use a third-party storage services such as commercial banks, but history has taught us that gold can get lost even there, especially during wartime and political upheavals such as revolutions. This has also happened several times in the last century. During World War II, large masses of gold were stolen by both state and non-state actors. Similarly, during the Soviet Revolution, a lot of privately owned gold was seized by the incoming government. So what about Bitcoin? As for now, Bitcoin has no counterparty risk. In other words, we don't have to worry that the actions of a third party are going to lead to a significant loss of their asset value. It is also protected from risk that might come from regulation or extreme change in government policy. The hodlers of Bitcoin are always going to be in complete control of it. As a peer-to-peer network, the Bitcoin platform gives its holders a level of control that bypasses regulations or the use of state force. Meanwhile, we are almost assured that this value will continue growing over the years as the supply is determined and the emission rate of new units every 4 years. The autonomy and increased scarcity of Bitcoin is most likely going to drive up its value over time, and it would come as no surprise in 100 years to see the price of Bitcoin extremely higher than where it is today. So where do you see the price of Bitcoin in the next 100 years? Let us know in the comment section below. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto, and I'm out.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin is over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Best performing asset in the last 10 years. True. Look into crypto, we need volunteers. No need to tiptoe, it won't disappear. Do your research, history made it clear.